You've heard about the AI winners, Microsoft, Google, NVIDIA. They're leading the shift. But what about AI roadkill, the companies who could see entire business models eviscerated by the coming wave of generative AI? Like edtech company Chegg, the first public company to blame AI and ChatGPT for a weak outlook and lose 50% of its value in one day. It won't be the last. This week on TechCheck Weekly, we're looking at them, the companies most at risk from an AI revolution.
Anybody who thinks that AI is not going to have an impact just isn't really paying attention.
Microsoft, OpenAI, Midjourney, even Meta and Adobe have all built some hype and value around splashy AI announcements and real-life applications of their products. Generally, that's been seen as a positive by investors. The only major company that's seen public blowback is perhaps Alphabet, as investors criticize the company for being too slow to roll out AI projects publicly and lose the zeitgeist lead to Microsoft. But taking a step back, Alphabet has been working on AI for decades, and it's still largely seen as a big beneficiary and driver of this computing shift. So it's hard to say they've lost when you're still at the top of the first inning. So it was notable this week when we saw the first real victims of this ChatGPT and new wave of AI chatbots. Companies often blame soft results on the weather or inflation or economic uncertainty, but Chegg had a new fall guy. It came out and blamed artificial intelligence. Chegg is an education software company. It provides homework help, digital and physical textbook rentals, online tutoring, and other student services. Basically, it is a resource for students. Here is CEO Dan Rosenzweig on its latest earnings report.
In the first part of the year, we saw no noticeable impact from ChatGPT on our new account growth, and we were meeting expectations on new signups. However, since March, we saw a significant spike in student interest in ChatGPT. We now believe it's having an impact on our new customer growth rate.
Chegg is basically saying that students are going to ChatGPT for help and answers to their homework instead of its software. Rosenzweig says he's going to fight generative AI with generative AI. And he says, yeah, you can use it to get some answers, but to actually learn stuff, you need to use Chegg. Another option he's proposing, use a combo of both. Chegg is developing its own AI product called Checkmate, which is meant to help students with their homework. It's built in collaboration with OpenAI, which is Sam Altman's company that created ChatGPT. But analysts, they worry that this is too little, too late. The company's revenue outlook was way below what Wall Street was expecting. Chegg closed down nearly 50% that day, cut in half. From its peak in 2021, this is a stock that is now down more than 90%. An analyst from Morgan Stanley wrote that AI completely overshadowed the results. Chegg may only be the start. Shares of Duolingo declined this week in sympathy. There's worries on the street that AI will be a net negative for the entire edtech industry. For Duolingo, the concern is that people on the internet will use these chatbots and large language models to learn a new language, replacing the need for actual humans to learn the language. Analysts on Wall Street are now putting together so-called AI roadkill baskets, entire stocks and sectors that are at risk of being killed by the advance of AI. Companies that build websites like Wix, Squarespace, and GoDaddy, all under pressure this week on the notion that AI can just do that for you. It's also weighing on stocks like Fiverr and Upwork, Staffing Place, companies that help you hire freelancers for specific jobs, think copywriting, coding, or website design. Upwork reported earnings this week that weren't terrible, but just like Chegg, there was a disappointing outlook and the stock fell sharply, down some 20%. There's reports of current users submitting work that was clearly performed by some sort of AI assistant, raising the question, why not just eliminate the middleman if AI is going to do it for you anyway? As investors wrestle with the potential of AI to destroy entire business models, they're also trying to quantify the threat or the opportunity to eliminate jobs. It's already happening at IBM. The company now pausing back office hiring and says that around 30% of jobs could easily be replaced by AI in 5 years. Goldman Sachs took a comprehensive look at the industries it expects to be most impacted. Office and admin support, legal, architecture, and engineering, it sees those as easily automated, most at risk. On the other end of the spectrum, less impacted are in-person physical jobs like cleaning and maintenance and construction. Across all industries, all jobs, Goldman says 25% of employment could be automated by AI. That's a quarter of all jobs. But what's next won't be the layoffs on the margin at IBM. It's whether any of these companies can incorporate AI or use new technologies to grow their business. Before AI renders them defunct, can they pivot? Shopify was a case study this week in the delicate dance tech companies have to perform in 2023. Earnings were good, profit and revenue beat estimates. The company announced it is laying off 20% of its employee base. That's thousands of full-time jobs. The company also selling its logistics business to Flexport. It was a big, expensive project for Spotify to move the company from the world of bits and software into the physical world of atoms, an expensive, labor-intensive job of actually moving goods around the world, something that looked a lot better in a zero-interest rate world. Getting out of that business lets the company invest in, what else? Artificial intelligence. Shopify says it's refocusing its priorities on e-commerce software as well as newer initiatives in AI. Tobias Lutke, the CEO, quote, Shopify has the privilege of being amongst the companies with the best chances of using AI to help our customers. The stock soared 25%. Lesson learned. The perfect combo for public tech companies right now is beat on numbers, announce layoffs, close or sell unprofitable businesses, and, of course, throw in a little AI magic. Some companies will have to move quicker than others.